Stock market today analysis for Wednesday, February 15th, 2023. In the description of this video, you'll find a link to ifsuccess.com. It is getting a bit of a makeover. I got a new page up in here. This one looks like the old page, right? Because I copied and pasted it, basically. And yeah, so we being me and myself, me and this website, getting a bit of a facelift and getting ready to launch some products that ultimately got 3 in mind, maybe 4, but definitely 3. Not sure which one's going to be first, but definitely one or more is going to be released before March, the end of March. So anyways, check out I Have Success. There's also other links to different things in that description. Just read through that stuff, see what you like. You can look, check out what the whole mission of I Have Success is, and the whole reason why I'm doing any of this stuff, which ultimately is twofold. One is it really helps me learn as I attempt to crystallize my ideas and put them out there into the marketplace. Feedback I get from the marketplace helps me adjust and correct. And also the more I make these videos, it's getting me to look at the stock market a bit differently. And sooner or later, I will figure out how to make some products that add some value to the marketplace, and I'll make some extra money that way. In the meantime, there's going to be a video popping up right here in about 2 seconds. 1 second. Boom, there it is. Remember, it's at the 2-minute mark. You don't got to watch it right now. Just remember the good old 1, 2, right? 1, 2, 1, 2. You can remember 1 and then 2. Just remember the 2. Anyways, let me write that down. 2 minutes. I'm going to put a link to a video of 5 reasons why you should sell cash secured put options on stocks you'd be happy to own. With the stuff that you can get at ifsuccess.com, it'll help you figure out the how-to. But when you know the why, the how-to is a lot easier. We're going to start off by looking at the line chart of the S&P 500. Let's zoom in here a bit. We're definitely in a range. At the moment, we are in a bull trend. We want to, I don't know who this we is, to be honest with you. We being, I guess, you and I don't know you, you don't know me. So just please allow me to interchange these pronouns of we and I, and if I'm not hitting your proper pronoun, then golly gee willikers, I don't know what to say about that. But nonetheless, what pronouns does the market have? Right now, the market has the pronoun of bull. We got low, higher low, higher low, higher low, higher low. We pass this little point right in here, right? We'll get out this thing right here. Right? It's past this, pulled back. See this point right here? Look where it pulled back almost to that point. So now, as I've been saying for the last X amount of videos, we want to see what happens up here in the 420, 440 area. Now, right now, we haven't got to the 420. So one thing that could happen, let's say we start getting close to the 420, but it starts petering out. Well, that gives us some information, right? What if it starts getting close to the 420 and it goes through 420, but it's real weak? It just doesn't have a lot of momentum. That's telling us something else too. What if it gets up here to the 420 and just blasts through 420, and now it's up here knocking on like 430, 435, or just boom, go right up here to 440 or something? Well, that tells us something also, right? So any how it moves in the up direction tells us gives us feedback, right? Gives us an idea of the strength of the momentum of this move. Now, let's say if it starts turning around, let's say it gets close to 420 or over 420, but it starts falling back down here between instead of 420 to 440, for 420 to 400. Then we want to see how far it gets back to the 400 and what happens around there. Same thing, like does it blast through it? Does it kind of peter out? Is it, all these different things, whether it's up or down, it's giving you an indication of the strength of whichever way it's moving. So at the moment, what we'll do, right? We see it's been going up. We're getting into this area in here that should provide us some valuable feedback right into this 420 to 400. Let's look at the going backwards today. We'll look at the 12 sectors of the stock market, see how they ended. Technology sector, right, kind of resuming this bull trend. You can see that. Don't need. I mean, my lines aren't even straight, but you can kind of see how it's sort of there. Now, drawing trend lines, it's subjective. I get it, but I think I don't know. I'm guessing you can see that. I can kind of see it, how it's been going up. Now, okay. Now this one, as far as moving the S&P 500. Now, this isn't something we want to get caught in the weeds too much, but let's just take a quick look at something over here. Right, move this over. Let's look over here. Go to our handy dandy Yahoo Finance. And sometimes, depending on what you want to do, sometimes it's good to be able to split some hairs. SPY. So we put in our ETF. All right, the ETF you want to find out about. So we put in, like in this case, SPY. We go under here to holdings. Right? You see that in this first line right here? Boom, holdings. You go over here to holdings. Click that. It'll show you the sector weightings. But what we're more, I guess we can just take a peek at the sector weightings. Quickly looking through here, you can see that technology has the highest weighting, a little less than 24%. Right? What's the next one? Next one would be healthcare, right? And then financial services. You see why I got this set up? Technology, healthcare, financial services. And then after that, is it, what's after that? I know I'm out of order after this. Looks like maybe consumer cyclical. And anyways, we don't need to go too much in the weeds with that. But the thing I really want to point out is this one right here, technology. It's making up almost a quarter of the S&P 500. So whatever the tech sector is doing is putting a lot of weight in whatever direction for the S&P 500 to move up that way. The reason why it may be good for you to understand that differentiation is that what if you have 3 sectors of the market kind of moving up, but everything else is tanking? And why would like right now we got 2 sectors basically of those 3 moving up, right? With healthcare moving down, this moving up, and then if everything else was falling apart, you might look at the S&P 500 and think the whole stock market is doing good, and not necessarily, but the S&P 500 does have a lot of push of whatever the overall market's doing. So these small differentiations depend on what you're doing as a trading style or an investing style or a combination of your trading and investing. Sometimes it's good to be able to split the hairs. Sometimes maybe you don't want to split the hairs, so you pick a strategy like selling cash secured put options on a fundamentally strong stock that's probably going to be around for the next 5 million years, and then you just kind of go about your day. So anyways, we're in an uptrend here in technology, at least for a month. Everything that we're looking at is 1 month, 1 day. Right? So it's just a quick snapshot, really. But we see here, this is a 200-day moving average, and we see that it's kind of flattening out, but you can see it was sloping down a little bit. So this moving average is calculated by taking the last 200 closes and then dividing them by 200. So a bit of a bigger trend, like a 200-day trend, is It's kind of a flat to down, even though it's up at the moment. And then our volume, kind of a secondary indicator, right? But it's sometimes it's worth it's worth noting and looking at. That's why I decided to put down there, because I like to see what the volume is. Healthcare, really just going down in this range, right? It kind of got up here and then boom, broke down. It's really kind of right back into this range right there. Financials, you see that how it was kind of going up, and it's basically been moving sideways now. Now over the past month, you could say it's up, but right in here, it pretty much started moving sideways, somewhere in there. All right, so our three big sectors that make the bulk of the S&P 500, we got one going up, we got one going down, and we got one looking like it's going sideways. So what might that do, right? If we have something going up, and we have something going down, and we have something going sideways. Well, this one right here has the most weight to it, right? XLK. So that's a lot of momentum pushing up. And then these two are just in like whatever 15% or something like that. So this is significantly more weighted. But when let's see if we can look at both of those again. You got financial services, 14, basically 14, healthcare. So almost a little less than 30%, right? So this, I tell you what I'm about to tell you, you're not gonna be able to prove this in a court of law. I would never make a good attorney with this, but I wouldn't doubt it if we see some sideways motion going on. What do we see here in industrials? Looking sideways, right? And through here. How about here in basic materials? Kind of looking sideways, even though it's like closed right here, closed right here. Yeah, it's basically sideways. And then communication overall, if you look at the first candle, you look at the candle today, it's up. But it pulled back from here, and potentially is it going to start moving sideways? Our moving averages sideways, kind of sideways to down, kind of sideways, kind of more down than anything, kind of down, but it's like it's not a. Is there a steep slope down? I don't see a steep slope. This would probably be. You look at the steepness of this compared to this, right? Nothing is super steep, but so our moving averages looking kind of like sideways to down. We can quickly look across here. The closest thing we have to an up moving average is energy. That's like one out of these 12 sectors. It's probably like 9 to 11 that are like the real big dogs. Like retail is probably not a real big dog, and probably not real estate, but what the heck, makes it nice and even with 12. And I don't know, I just like looking at all of them. But out of 12 sectors, you got basically everything. If you look at the 200-day moving averages, looking like down to sideways, and with one moving up, it's not even a strong up. And you look at the candles, and it's like kind of looks sideways, right? I get it. We could really get nitpicky and say, well, look at where it was right here, and it's slightly down lower than that. All right, but it's pretty much right in that range, right, kind of in there, 88 to 90 something. But even though it went up and went down, still kind of sideways. So yeah, I mean, I wouldn't doubt if we're just gonna see. I wouldn't be surprised if we're gonna see some more sideways movement. That doesn't mean that is what. Like me personally, the way I'm looking at this stuff is that I have less of an opinion, and I'm just trying to read what these charts tell me. So versus instead of me saying like this is what I want it to do, this is what I think it should do, anything like that. No. That's not that's not my goal. Now maybe I have some bad habits. I got to slap my opinions out of myself. I got things like that. But what I'm trying to do is I'm trying to read these charts and see what the numbers are telling me. Whether the numbers are whether the books are cooked or not doesn't matter. It's like these numbers are these numbers, right? So, and then from there, what decisions should I make? So, VIX again dropped down today, right? So we're back down, rose up to a little bit below 22, and we're down here to around 18, which is basically in this range of kind of sideways, right? Drop down even more, sort of in this range of about 18 to 20. So people seem to feel relatively comfortable in the market. Our candle today on the SPX, on the Dow Jones, on the NASDAQ, and definitely on the Russell 2000, right? That one being the strongest to the upside, but they're all bullish candles. But look at this. Really, we are really sideways bound here in the Dow Jones. It seems to be making a case for potentially sideways. I'm seeing around like this 114-ish area. It's maybe hitting some resistance right there. But if it keeps kind of doing what it's doing, it's going to be going sideways. NASDAQ kind of dropped down, right, from right in this area. Sort of looking sideways right there. Here we are. We're back to this area again. Here we are, kind of back to this area again. And the Russell 2000, which I think had the steepest sell-off here, took 4 trading days to make up this lost amount right here, and which ultimately opened here, right? Ultimately kind of in a way sideways, right? I get it's going up, but it dropped down right here. So here to here, I get it up, just sideways in the last couple days. But everything, you know, up, kind of up to sideways, up, starting to look sideways, up to, is that sideways? Possibly. So we'll have to wait and see. I wanted to show you this. Look what happened, at least to the Bitcoin futures. Ooh, doggies, look at that. Wow. Sold off to down here, and boom, that's a humongous candle. Man, that is why I wish the state of Hawaii gave me, I wish they felt that as a 46-year-old individual that I was responsible enough to be able to decide if I want to speculate in cryptocurrency. You know, I can understand them saying like, hey, you can't drink and drive. Like, that's understandable. I'm not asking for that freedom. You know, I don't want people to be able to drink and drive. But I think it's a little, you know, nanny state-ish, a little nitpicky that, you know, grown adults that are old enough to drink beer, get married, you know, go to Vegas and lose all your money that way. You know, why can't you gamble some money in Bitcoin? I don't know. They got some reasons why. They're not letting your good buddy Brent do that. But we got a low, we got a higher low. We got a steep decline on that 200-day moving average. Well, maybe that's going to be changing. Man, I tell you what, though. As I was saying, I wouldn't be a hodler of Bitcoin, but I would trade this. I should just move to a state that allows me to trade it, because I love the fact that it trades 24/7. You know, I really do love trading crude oil, but that takes a break. Like, this does not take a break. The only thing that the option market is still developing for Bitcoin and cryptocurrencies, but I think it's more developed for Bitcoin. But Ledger X, I guess, somehow got entwined with Sam Bankman Fraud from FTX, and then they quickly changed back once that scumbag got found out to be a lying fraud, which he's probably still you know, lying, pretending he's not a scumbag. But that's what scumbags do, don't they? They just never come out and admit it and say, you know what, I got to start taking some accountability for my lack of morals and ethics. But anyways, so I bring up Ledger X because that was a place where you could where they had some options on cryptocurrencies. But like I said, my state, I'm not a free enough human being to be able to decide if I want to you know, put some money in here. But you know what they'll let me do? They'll let me smoke a bunch of cigarettes, and they'll definitely let me drink alcohol and, you know, waste my money on all types of other things. But cryptocurrency, no, that's not for you. Anyways, so yeah, I'm thinking I'm still on the sideways. I'm still on the the sideways camp. Right, but once we start getting up here, I think I wouldn't have been surprised if we touched 420 this week, but there's still 2 days left. We'll see how things play out. Tomorrow we got what do we got? I think is it a producer price index tomorrow? Yep, producer price index, and so yeah, we'll see how things we'll see how those things shake out. I even though I don't know, what I do know is your good buddy Brent. I'm in a pretty good position. Right? I'm in a, like, I want to make things better, but I tell you what, I'm in a somewhat decent position, and one of the big reasons why is that I've really learned how to do this, selling cash secured put options on stocks I'd be happy to own. And you can learn to do that too, right? And if you're only going to do one strategy, I would suggest watching this playlist, get these downloads, and watch the video at the 2-minute mark. Learn this strategy, paper trade it, and well, once you know the reasons why, when you watch that video at the 2-minute mark, once you know the reasons why, you might be a little more inclined to learn how. And the hows, even though it's not simple, there are definitely moving parts. Overall, it's I'll go so far to say it's easy. Once you understand what you're doing, yes, there are moving parts. Now, sometimes things are simple, but they're not easy. In this case, it's the other way around. It's easy, but it's not simple, right? Because you got to be able to, part of it, one thing that you have to be able to do is you have to be able to fundamentally do a fundamental analysis on a company and make sure that you'd be happy to own it, right? You don't want to be, thinking that FTX is going to be around the rest of your life. You don't want to be thinking that Enron is going to be around the rest of your life. You know what the problem with Enron was, though? They just straight up lied. They say, well, numbers don't lie. But hey, who inputs the numbers? And your good buddy Ken Lay and whoever else, I don't know if he's your good buddy, but Ken Lay and whoever else, they were just straight up lying. They just straight up lied. They inputted, they lied. They just lied on these numbers. So, Blockbuster. You don't want to get caught in a Blockbuster. So, you want to do some fundamental analysis, but you're trying to, in a way, it's like you're trying to sniff out the frauds. You're trying to sniff out things that don't seem right, and then from there, let's say you got a company or a handful of companies that you feel good with, then you got to make sure these are in your price range, right? Because you're selling a cash secured put option, you're doing it in increments of 100. So if you got a $10,000 account, it's probably going to be hard to use a $10,000, $100 stock, or it might be hard to do it. Right? maybe you'll just be squeezing by. But say if you got a $5,000 account, you're not selling a cash secured put option, probably on a $100 stock or $150 stock, because you need to have whatever the stock price, whatever strike price that you're promising to buy the stock, times 100. You need to have that cash in your account, and that's why it's called cash secured. Cash secured. You're securing your position with the cash. You're saying, hey, I'm making this promise into the market, which is a legally binding promise, mind you, and I've got the cash to secure my promise. And what else? So there's a little bit of that, and then there's there's some little things like what strike price, what expiration dates, and then what do I do if I get assigned, right? And then also you might want to differentiate between what about when the stock market's moving up versus when the stock market's moving down or moving sideways. So maybe, like for me personally, when it's in a strong up market, I'll use different stocks. I'll use stocks that I'm doing more of the wheel strategy with. If you want to know what the wheel strategy is, you gotta watch this playlist. And then when it's more of a downward market or sideways, depending on where, like we're down, like we're still in the range right now where I'm able to get filled on some strike prices of stocks that I want to own. Now, sometimes I'm not getting the biggest amount of premium for them, but that's okay because I'm hedging myself. My insurance policy is, I'm trying to buy a stock at a strike price. I'm making a promise to the market, and I'm totally okay with filling my promise at this particular price. Like for example, right? I definitely do not do this on the S&P 500, but let's pretend I did. And let's say I did not want to buy, like let's say I only wanted to buy at 360 and lower, right? Then I just don't sell at 380. I just do not do it. Even though I could make maybe hundreds of dollars more by doing it, I will take way less premium because what if this happens? What if it drops all the way down here, right? This is not the price that I'm comfortable buying. I want to set up positions for myself that I'm totally happy with whatever outcome happens. And if I'm making a commitment into the market saying that I'll buy 100 shares at $380, but when it comes down to doing it, then all of a sudden I'm changing my mind. I don't want to be doing that. That's not using this strategy properly so I can have the full advantage of sleeping well at night and being able to, go to your kid's basketball game and not have to be looking at your phone every 5 minutes because you're worried about coming out of pocket, whatever that is, 380 times 100. Is it 38,000 or 3,000? What is it? Let's just point out that your good buddy Brent has horrible mental math. Let's just let everybody know. And one thing I do have, even though I have horrible mental math, I got a pretty strong ego where I just don't care. I will acknowledge my faults. All right, come on, calculator. There we go. 380 times 100. All right. Okay, so I should have been able to figure that out, right? Just add 2 zeros. Well, I didn't figure it out. Okay, lesson learned. I'm still trying to learn math here as an almost 50-year-old man. You can slander me. You can do whatever you want. You can make fun of me. I really don't care. So, anyways, if you don't want to come out of pocket $38,000, but you're happy with $36,000, then so be it. I think you got the message. All right, I hope so. Anyways, my friend or friends, however the ball goes, that's what I'm personally looking at, and waiting to see what's gonna happen. In the meantime, though, I'm still making money. I got, I think, 3 different option positions expiring this Friday, and one of them I might be getting assigned on, and I actually really hope that I'm getting assigned on this one, because I have some shares of the stock, but I want more. And this is a stock that doing a fundamental analysis on it. It's not the stock, but doing a fundamental analysis. Financial health is excellent. It's got way more cash on hand than it has of debt. It pays a very nice dividend. It is its year-over-year earnings have been growing at a greater than 50%. Did I say it has like super low amount of debt? It is in an industry that is not going away, and I'm just highly impressed with it, and I'm super impressed with it. It's got a really nice dividend, so I'm working on I want to be want to get to where I'm not including covered calls, but just from the dividend, I want to get to a place where with this particular stock, I'm collecting around maybe around 500. I don't know. We'll see. Somewhere between. Let's just keep it a little bit fluctuating a little bit. Somewhere between $400 to $700 a year in dividends. Right, $400 to $700 a year goes pretty far for me. I keep my monthly expenses pretty low. It's definitely going to take care of more than one annual bill. And or I could just keep reinvesting those dividends back into buying more shares. I think this company, I wouldn't doubt that in the next, I don't know how long. I wouldn't doubt that in 10 years from now, this company is going to be significantly higher than it is now. In fact, using Benjamin Graham's value analysis formula, which is this old school valuation tool that may or may not be applicable today. I mean, everything is like it's a lot more strict, right? To like different companies that if you use this, you're like, oh my gosh, by going by Ben Graham's value formula here, I got to buy this like 70% off. So that's something I look at. And this company, on the other hand, is it would be like it would almost triple. It would need to almost triple just to get to Ben Graham's fair market value of it, like just the fair value. So yeah, I want to load up on it and see what happens with this company over the next 5-10 years as I'm collecting these dividends. So right now we're looking at the futures of the four major indices at 4:32 p.m. Hawaiian Standard Time, and we're on a 3-month chart, each candle being a daily, and we got the 200-day moving average up a little bit, but man, you can see this like sideways to down 200-day, sideways to down 200-day, basically a sideways 200-day. It's a flat 200-day, and up for the last 4 days. Basically, I know that wasn't an update, but overall, the last 4 trading days up. 1, 2, 3, 4. That one's a little more. That one is not necessarily up. This got up. So, yeah, things looking pretty sideways to me. Upward to sideways at the moment. So we'll see how things play out. You guys have a fantastic day. Aloha.